Is it here we go. Hello, everybody. We have the eye and we're ready to go. Good afternoon, Jason. How are you on this fine, glorious and cold day?
Hi, Rog. I'm good. It's not so fine and glorious in Sydney. It's cold and not my best time of the year. But other than that, all good. All ready to talk some charts.
All ready to go with the charts. Very good. This week's been a pretty flat week once again, I think, and there seems to be a lot of news coming out in the world, but not much sort of action I feel in the markets. But so it'd be good to get in and see what we can find, and especially with our viewers as well and their stocks, and see what we can find out of those as well. Jace, before we go ahead, do you want to just put your disclaimer up? Put our disclaimer up.
Let's do that. So everything today is general commentary only, and these disclaimers here explain all of that. So, and also the other important point is I'm not part of Selfwealth. I'm Motion Trader. I'm from Motion Trader. So my disclaimers at the top. You see all the licensing details, etc. Selfwealth disclaimer below, and just double checking with everyone. It's all general commentary only, and no personal advice given.
Fantastic. Now, Jace, I hear the Blues won last week in Melbourne. They did all right. Just before we get onto trading, they absolutely smashed the Maroons. For those that were on following the NRL, the State of Origin. Is that right?
A record start in the first half. So that was all good, and evens it up, makes it interesting for the decider up in Brizzy in a couple of weeks. But then the girls lost the next day, so we lost our double header potential. So anyway, we'll take the win with the guys, and all good there.
Yeah, it was such a big crowd here in Melbourne, actually, for that State of Origin. So it's amazing how the crowd it can pull down here. So I'm just surprised it just doesn't have a bigger following here in Melbourne, considering, and the Melbourne Storm as well. They're going all right this year, are they? The Melbourne Storm? I haven't really followed.
Yeah, I'm not quite sure where the Storm's tracking, but but it was good. I think it was the second biggest Origin crowd ever.
So, who do you follow? I haven't asked that yet. Who do you follow in the NRL?
In the NRL, the Panthers supporter, because my daughter goes for the Panthers. So I've decided I'm in the north of Sydney. We lost our North Sydney Bears 20 years ago, so I'm without a team. So
yeah, right.
I go with wherever the kids are going at the moment. So I'm a Panther.
Okay, fair enough. Well, hopefully we don't upset too many viewers with those responses there. So, all right, guys, just if you didn't know, obviously we're going to analyze the three markets that we offer at Selfwealth today in general. And then if you have any general questions around technical analysis and charting, then please feel free to pop them in, as well as let's have a look at some viewer stocks from a technical perspective as well near the end. So fantastic to get going. Let's get going within the ASX market then, please, Jace. Let's have a look.
Okay, so we'll get our charts up. And so first chart here is the ASX 200. And this is really becoming a fascinating tug of war, is how I describe this situation, this setup we have in the ASX 200. It's I think there's a big move in the making. I don't know when it's going to happen or which direction it's going to be, but I think there's a big move coming. And I think the best part is that we have some clear levels to watch, and the main focus point is this trading range that we have. Distinctive range. It's a contracting range, as you can see by the converging upper and lower boundaries. Started back here in April, so we're 3 months into this range, and you can see the price action continues to coil. So it's just getting narrower and narrower as we move towards the apex of this triangular range. Continues to compress, and the compression just builds up energy. So when it does break it from these patterns, it usually does tend to go with a bit of momentum. We saw yet another good rally off the lower end of the range last week. So this is on Thursday. Just see down here on Thursday, we had the market sold off, went from towards the top of the range to the bottom of the range in just 2-3 days. And it actually looked like it was on the verge of breaking down last Thursday. It's right down here on support, but then we closed the day up near the highs. We've got a really strong really strong buy the dip came in. And it's also interesting that it came in from around the 100-day moving average. So I've got the 100-day and the 50-day moving averages. And they often act as a support during a rising market. So we've had this rising market since October. Prices got above the averages. And the averages tend to offer, that's where buy the dip tends to come in. And that's so far, that's what we've been seeing through this pattern. I was actually a bit surprised at how strong the rebound we got last week was. I think that's encouraging to see. It's encouraging to see such powerful rallies off the lower end of the range. So I think from that perspective, I'm cautiously optimistic that we can see this pattern resolve to the upside. But until this range breaks, we just can't. We can't be sure. We can't be sure it is going to go to the top side. We also shouldn't overlook that every time the market or the ASX 200 gets up to this upper regions of the range, there is selling interest. So there is distribution coming in at the top of the range. So there's certainly interest in buying down the bottom, but there's two sides to the story. There's interest in selling above. So it's not a given which way this is going to go. I've got that cautious optimism, but it's cautious, and it's cautious for a reason. We don't have a break at this point. I think the risk factor to be aware of here is what would happen if this strong buying interest on dip was to weaken for whatever reason. Who knows what the reason may be. But if this buying interest was to weaken, well, it does then really open up the possibility of that downside break. It's one of those things we've got to consider. You've got to consider risk and what ifs. And if we did see a break lower, well, then that would potentially see a move coming in down to, could take this market back towards the April low. So always important to bear these things in mind. And this is how these ranges works. When one side gets overwhelmed, whether it be the buying side or the selling side gets overwhelmed, you often get those momentum surges in the direction of the break. So yeah, let's hope we've got a break to the top side, but be prepared, could get a break to the downside as well. I think the levels to watch here, watch the May and the May and probably also really the June highs. It'd be these cluster of highs here which are most important at the moment. We get above them, well then I think we clear the April high. So it's really the May and the June highs which I'm watching. Can we get a break above those? And then on the downside, it's really last week's low. I think if last week's low goes, Thursday's low, that really does open up some downside risk. So, and these levels they're clear cut and they're close. So, I think this is building. As I say, I'm giving the benefit of the doubt to the underlying trend that's been in place since October. I think you've always got to like lean on the path of least resistance rather than trying to pick tops. A mistake I made early in my career in the 90s was I was more inclined to try and pick tops rather than go with the flow, and the flow is still to the upside. I think that's it. If you're going to call it either way, you call it to the side of the most recent momentum. But always know your risk, know sure things. Be prepared to be wrong. For me, it's a case of stop losses on my new positions, trailing stops on my profitable positions. And I want to stay with my best stocks as long as possible, as long as the price action justifies. But if stocks break down, if my stocks hit my sell levels, well, then it's the case, protect capital, stay in the game, come back and look at it later.
Yeah, well, you got plenty of time because it's not going. Oh, we just hope it's either going to break to the upside, right? But as you say, watching those levels is important. But having a look at those moving averages, they're also really going sideways at the moment. So yeah, could be a good time to go on holiday anytime soon. So all right, let's have a look at the US markets then.
Yeah, so let's jump over the S&P 500. Look, there are so many cross currents going on in this market at the moment. We've got an uptrend, which is simple enough to see. It's been in place for some time. Nice, clean-cut uptrend. But when you look at it a bit closer, I think there are some clear risk factors that we need to pay attention to. So just looking at the most recent price action, it's been a fairly quiet week and a half or so for the S&P 500. Been trading in this narrow range for the last week and a half, last couple of weeks. I think that's generally positive, and it's often good when we see a market which has been rising when it pauses and goes sideways. And reason for that is rallies tend to be more sustainable when they consolidate. So I think that's a tick. And just looking at the price action, it's one of these tight compression bands. And these typically result to the upside. When you've got the rising trend, you've got the sideways tight compression, they often resolve to the upside. So from that perspective, it seems likely there's going to be a new all-time high in the S&P 500 before too long. And this is one of the risk factors in that we've been talking about this for a bit. It's just such a narrow rally. It's spearheaded by big tech, and most stocks in the S&P 500, they're just not participating. It's largely, not entirely, but it's largely a big tech rally. And let's contrast this with the S&P 500 equal weight. So mental snapshot, there's the S&P 500. Now let's look at the equal weight. It's a different story. Different story completely over the last few months. So the broader market isn't confirming the highs we have in big tech. So where the S&P 500 is making new highs, S&P 500 equal weight is not. So it's a two-speed market, big tech running and most other stocks consolidating. You can see we've got this sideways movement since April. It looks more like the ASX 200 than the S&P 500. And just looking at the latest price action, the equal weight just last night, it's fallen back to its 100-day moving average. This isn't necessarily bearish because it's consolidating. It's just like the ASX 200. It's consolidating near those moving averages. We don't really have the near-term direction in either way. If this does stabilize at current levels and break to the top side, well, then that would be bullish. And we could see the S&P then extend further, more stocks participating. That would be good. But we don't currently have that. At the moment, we've got this non-confirmation, which I think is a risk factor. Coming back to the S&P 500, I just jumped back to our S&P 500 chart. And we've also got, I'm just going to zoom in on this price action over the last couple of weeks. We've also got two key reversal days. So we have one here from the 20th of June, and we have another one from Friday, just this last Friday. So the key reversal days is where the market opens above the previous close, makes a new high, closes below the previous day's low. So we've got a pair of them. And they're not necessarily like the key. You say key reversal day, you think, okay, market top, it must be turning to a bearish phase. It doesn't necessarily work like that at all, but it does show there's sometimes it can just be a pause. Like here's another one here back in the 23rd of May. It did lead to some weakness back towards the 50-day moving average. So it's more of I think the narrowness of the rally or the market breadth, the lack of market breadth, is more concerning than these two single day chart features. But again, they're another risk factor to just keep in mind. So how do we play this? Well, I think we've got to say it's still a bullish structure in a clear upward trend. And from that, we'd say the base case you'd have to then say continues to be stay long, let profits run. That's been the play since back here in November, and it's been a good play. Stay long, let profits run. No need to try and pick the top. The market the top will only be identifiable in hindsight, so don't try and call it. Let the trend run for as long as it can, but just be aware of these risks which are creeping in. Don't be blind to risk. And for me, this warrants probably a more conservative approach. I don't want to be like going super aggressive on the long side, but be long, but yeah, mindful that there are some other there's these cross currents, as I call them, which do appear to be there once you look just below the surface of the headline chart.
Yeah, it's really good divergence you've spotted there, to be honest, Jason. And if we'd never done these sessions, I would never have probably looked myself at that equal weight index, right? So I'd always be looking at this very bullish chart, bit of consolidation now. But I'm sure a lot of viewers would appreciate that, having that under their, just to give them a bit of an objective opinion, right? So it's good.
That's
all right.
a puzzle. It's really a puzzle, and we've got all these pieces, and we're trying to clip them together, and it's sometimes they clip together quite nicely and you see a clear setup. Other times, yeah, it's a little bit more opaque and you can't quite go, does this one clip there or is it there? What's the main driver? I think that's where we are at the moment. It's one of those times where the setup just isn't clear. The upward trend on this chart is clear, but then we're looking at some of those other pieces clipping into it, and they're not necessarily supporting. So we get that. This happens from lots of the time. It's probably less common to have really clean setups where everything points in the same direction. But this is the market. This is what we deal with, and this is what makes it interesting. Always try to look and find the story, and then manage the risk around whatever we discover. And it's not about being able to present the idea which is going to be right every time, because we're going to be wrong heaps of the time, and that's okay. But then you've got that risk management strategy, so you can back out when it's not working, lose a little bit, and when it is working, hopefully make a lot by letting it continue to work.
Yeah, fantastic. All right, let's have a look at the Hong Kong market then, please.
So the Hang Seng, and well, this is encouraging. It's up today. So when I was prepping for this earlier on, I didn't have today's open, and so look, it is starting to slip back from where we spoke when we spoke last week. Look, where was last week? Tuesday, yeah, last Tuesday we're getting a little bit of a bounce off the midway into these moving averages, the 50 and the 100 day, but then it started to slip back later in the week. It is starting to put pressure on that case for an emerging upward trend, and this is what we've been talking about going back to, or maybe it was in February, we started talking about the potential of an emerging upward trend, and that's all been playing out nicely until really the last couple of weeks. It is now starting to put, I think, pressure on that scenario. I think it really needs to hold around current levels. So it's encouraging to see this rebound on the open off the 100-day moving average. I think if it starts to, I think the Hang Seng starts to lose its positive structure if it really has another 2 or 3 down days, gets below the 100-day moving average. And this pullback really then just starts becoming more of a whole lot less clear. So I'd still maintain a bullish bias for the moment, but it is really getting on shaky ground. And we see much more weakness back towards this support at around 17,000. And we start to say, well, look, was this just a bear market rally, another bear market rally, as we've seen previously? So not quite there yet, but it's as I say, ground's getting a bit shaky. I'd like to see more evidence of buying the dip, and for today's rally to get some follow through, see this back up towards the high 18,000s. Then it starts to say, look, we're starting to see buying coming in to underpin. We don't quite have that yet. Looking over at China, and again, we're getting this nice bounce today, which is important. I think this is where we need to see it. It's held up a little bit better than the Hang Seng in the last week. It spent much of the last week or two, week and a half, trading quietly below the moving averages, and the moving averages are also starting to turn higher. So we really want to see a bit of a rally, just pushing back up. Doesn't need to make new highs, but just lift itself off the bottom to sort of show stability, and then potentially start to build a base over the next over the next few months, which you can then potentially rally off. But with both markets, I think it's a case of wait and see if prices stabilise and start to rally before considering new positions. So I think there's still potential here, but it does need to hold its ground pretty much here and now, I think.
All right, very good. Okay, let's have a look now at some of the questions here. Morning to everyone once again, if I didn't say it before. Macoose, Michael, M. Barnes, great question. I'm not sure if you trade with us, but please do, obviously. Now, let's have a look at the Selfwealth chart. We've never really done this. Obviously, this is a Selfwealth product. Let's have a look at the Selfwealth chart to start off with, if that's all right. What do you think of that chart, Jason? I know personally it's not going so well. It doesn't look so good on the chart, but let's have a look at it. We can only have a look at the facts here.
Okay. What is the ticker code?
So SWF, and the question is from M. Barnes, do you think that SWF will be able to turn their share price performance around, or are they under serious pressure of going broke? A fundamental question there, but what do you think of the chart right now? So.
Look, the chart's not great. It's not a stock that I'd be looking to buy because the downtrend is clearly in place. Prices below declining moving averages, and it has been for some time. So yeah, look, it's not a buy at this point. It's a case of would need to see it stabilize, track sideways, and then from there you're looking for a break back above the moving averages, give the moving averages time to turn, and then start to build from there. But we don't have that structure yet. It's just a sort of structure that would look for to then consider buying. But yeah, for me, it's unfortunately to say not a buy at this point.
Yep. So not maybe don't want to buy it, but you can trade with us still. If you have a look at that boom period there, that's really during the COVID period where a lot of stocks, small cap stocks, were really being able to take advantage of the macro environmental situation, right? So yeah. But look, I can't comment too much on the future of Selfwealth, but especially during this time right now, because a lot of annual reports coming out and whatnot. But if you look at the recent reports, and this is all factual information, you can just go and have a look at the company reports, right? Last quarterly report. We've made a profit for the first time ever. We've got good books, and that's why I love the company. I love the idea of Selfwealth itself, right? Being that Australian broker, and they're one of the first disruptors to have that lower cost brokerage versus what the banks were offering, and we still do, right? And along with the service, which we're only just improving, so continually improving that platform. I think we're in a good position, so I wouldn't be worried too much there, M. Barnes. But then you go and have a look and do your own research, obviously, as always. I'm obviously biased as I work for Selfwealth, but they're a great company, as you could attest as well, Jason. Is that right?
Yeah, look, I've been trading with Selfwealth for a bit over a year now, and I like the service. I like the brokerage. I've got an ANZ account. I've got a HIN number, so I feel security through that. So yeah, look, these are some of the things I look for, but everyone's got to go and do their own checks and make sure everything works for them.
It suits them. Exactly. All right. So I hope that answers. And if you do have any questions as well that we know that you wanted to answer privately, then just feel free to just message us. It's just support@selfwealth.com.au. Attention it to me, and I'm more than happy to reply. I'm the one that actually replies a lot of times to these the questions around these things as well, right? So all right, let's go and have a look at some other stocks here. Enough about us as Selfwealth. Let's have a look at PPS.
Haven't seen this stock for a while. Yeah, this is why I haven't seen it for a while. It's been a downtrend. All these drawings, these are from another time when I've spoken about it for some reason. Interesting to look at chart patterns from other times as well. It looked like there was I would have been saying it looked like there was a rounding base in place. There was a resistance, it broke above. So this is a sort of setup that I like. The movement gone from below the averages to above. It's just a good example of how a positive setup doesn't necessarily mean you're going to get a positive outcome. And someone will say, oh, look, that setup doesn't work, it failed. But I can show you plenty more where the stocks continue to go on to really strong and long-lasting upward trends. So we don't know which setups are going to be the successful ones or the highly successful ones, and which ones are going to fail. You don't know till you look back in hindsight, like we can do now. But the thing is, if you've got a risk management strategy, you accept that you're going to get the ones that don't work out, and you don't lose too much on them. So, for instance, say you'd bought on the breakout, and maybe you've got a stop loss back below the breakout. Maybe you've lost 15%. Maybe it's a bit more, maybe it's a bit less, but thereabouts. But when they run, you can make a multiple of that, and that's like looking for an asymmetric setup where you put the risk-reward equation in your favour. The ones that do work, hopefully, pay for the ones that don't many times over. That's what we're trying to do. Not call every turn right. It'd be nice to, but being realistic, we know we're not. I certainly know I'm not. But just find the ones where I think the odds are in our favour, the risk returns in our favour, and just keep playing them over and over. That's where we can get some good results. Looking at it current day, it's starting to set up a possible situation which could be interesting. Could this be another base, another turnaround developing? Do seem to have a series of higher lows. We've gone from below the averages to above, and we've had this sideways. You can see, how will I do this? I won't do that. What I'll do, I'll draw it in instead. You can draw this would be a contracting range, a bit like the ASX 200 is currently in, similar to the ASX 200's contracting range. And they often continuation patterns. So a continuation pattern is where the market moves into the pattern, through the pattern, and then continues. And that's what's happening on this occasion. It'd be nice if the ASX 200 is also a continuation pattern. Time will tell. So it's just recently broken out of this pattern. The moving averages are positive. It's making it high. So I think this is I think it's a stock it's a stock of interest. There's a positive setup here. So it could be potentially bought at current levels, maybe a stop loss back maybe below the 100-day moving average, maybe about 12%. And then you look at the upside potential. Well, yeah, it's a stock that could run, just getting back to the highs from November 22, that would be 80%. So that's not to say it's going to go there, but certainly got that potential to say risk 12 to 15%. Maybe you make 50 to 100%. So I'd say that's an asymmetric setup. Doesn't mean it's going to play out. Doesn't mean it's going to work. Could get another situation like this where it starts to go and then comes back, but we just talked through all that. But it's also got the potential to run a bit. So, yeah, I think this is well worth having a look at.
Okay, fantastic. Melbourne Storm are in first place, funnily enough. That's an interesting, there you go. So Sydney are on top of the AFL ladder.
I knew that.
Yeah, you knew that. And Melbourne Storm are on top of the NRL ladder. So how ironic. All right. What about SXE? Let's have a look at SXE.
This has been in a strong upward trend, this one. And it's like I struggle buying a stock up here, but I'd certainly be holding it up here. Like the best time to have bought this in the current run would have been the moving averages crossed back here in around August last year. Probably buying as it's probably buying as it was coming off that base. Moving averages crossed. We had the breakout. Not completely dissimilar to the stock we just looked at. In that we went, we've got a different ways you can draw this in, but we've got the sideways consolidation, and then we had a breakout, and then this one continued to run. The wide trailing stop would have seen off all these pullbacks along the way, and I'd still be letting it run. Would I buy it at current levels? Look, as I say, I struggle to buy things which have already run hard, because there are other opportunities in the market. It's not like there's only like 3 stocks to choose from. It's like, lots of opportunities. So if something's run hard, it's like, great, keep it if I've got it, but I'll probably look elsewhere for something which is more at an earlier stage, is my preference to do things. Or even when it was not maybe at its earliest stage, but even buying a breakout at an earlier time would have been preferable to once that you look at it and it has like really had this big, probably wouldn't call it parabolic, but it is a rapid acceleration over the last few months. So yeah, a hold or a just watch with interest if you didn't have it.
Okay, all right. Let's just switch gears here a little bit and go on to a question. I would like to know how we could use volume in relation to price action to determine accumulation or distribution phase. Do you know? To make sense? Do you use the volume indicator at all?
Not that often. Sometimes I find volume is. Sometimes it can tell a good story where you get a breakout on high volume. Other times I just find it is just no particular story there. Let's have a look. Let's just put it on. I prefer to look at the price action. Look. So a sideways period on low, like just looking at this period here, like you can see the volume generally does seem to get a bit lower during this sideways period, which is typical during a consolidation, and then you look for expansion of volume as price starts to break out, which is kind of what's happened here. Look, the volume's expanded as it's going up, but volume, when you read the textbooks, I often see examples, and the examples tell the story the author wants to tell, but then you look at other stocks and you don't see the same story. For me, it's the price action. Volume is secondary. I'll go with the price action first. But look, I don't discount volume, and sometimes I do look at it. It's really a case-by-case basis, so for me.
Yeah. I mean, the other question off the back of that is there a way to predict using volume and price action in a trading range to predict which way it could break? But when I look at that chart, I look at the chart going sideways or big red days where there's a lot more seller volume. But does it, as you can see, it's still going, the price is going up. So it's kind of straight after the price is going up. So it's kind of a bit of a disagreement there, right? So.
Look, it's good that this recent run higher has been on strong volume. That's encouraging. Like if it goes up and there's not much volume supporting it, that would be a warning sign. So you've got a breakout, but it's on low volume. There's not really much follow through buying to confirm that break. This has got that strong buying, so that's good. Doesn't necessarily mean it has to keep going up, but it's positive. But as I say, it's something I'd look at after I've looked at the price action to see is there a reason for me to doubt the price action I'm seeing, rather than a key driver of my decision to go with the break.
All right. Let's just have another quick. One of the questions is: have there been times previously when the large tech have kept running when the broader market has just gone sideways? I guess that's exactly what's happening now over in America with Nvidia, right? So,
yes, this sort of stuff does happen. I can't. I'd need some time to sort of go through the charts and look at things. I saw a really interesting comparison earlier about Cisco during the 95 to 2000 and Nvidia from 2019 to 24, so 5-year slots, and they've both got the same pretty similar total return over that period of 3,000 or something percent, and the expansion of their price to sales was the same. They both went from being priced at something like 7 or 8 times sales to 40 times sales. And well, history will tell us that Cisco also briefly became the world's largest company. I'll actually get let me just get a chart of Cisco. So they're a chip maker. CI. This would be it here. So I just put it on the weekly so we can quickly get back to where we want to be. So this was the period. So this is it really took off during the the boom phase of the boom, but it had been rising. It had been rising through the 1990s, and it was big performer. It was I think it was like the top performing big cap at the time. Briefly became the world's largest company. Got its nose in front of Microsoft, but only stayed there for a short time, and then came tumbling back down. Now we've got NVIDIA. It's got the same, different but similar growth profile. Got its nose in front of Microsoft for the world's biggest company not long ago. I think it was at Apple, one of the two. And it's up there. The three of them are up there, and NVIDIA got in front. And then it's not to say this. Stress a big point. This isn't predicting NVIDIA is going to do what Cisco did, but it's just looking at like where we can say like, are there times where growth has really performed and other stocks haven't? So during this phase of the mania, it was all growth stocks, and value stocks were left to the side. At the moment, we're seeing it's tech running, but looking at the Dow and the equal weight, other categories aren't running so hard. But again, stressing, I'm not trying to overlay and say, look, it's what happened here is going to happen now. It's just interesting to look at the past as guidelines, as guide to what scenarios that could play out, and then you use, rather than trying to call tops in a stock like NVIDIA, go, well, look, okay, well, we've seen dramatic rises in stocks before on the prospect of amazing futures that sometimes don't play out. So you always got to be aware there's also another side to these situations, and excitement around an idea doesn't necessarily mean that it's going to continue in that same trajectory evermore. And there's Cisco. Cisco's still hasn't got back to where it was. Still a valuable company, still a big company that's an important company, but it didn't continue that trajectory over time. I suspect NVIDIA won't continue its current trajectory either. Probably not a big call in saying that. Like, no company does that. But yeah. So there are other times where tech's done a lot better than other sectors. Sometimes things tend to balance out. This time is never different. Well, that's been the way of the past. It's probably going to be the way of the future as well. But yeah, just for me, it's like go with trends, manage risk. That's the best we can do. I'm not into predicting what's going to happen next with the current lineup of stocks and the stock market. Go with the trend until the trend and the price action tells you otherwise.
All right. Well, let's go back and see if we can find a couple of trends in these stocks. What about Zip?
Let's go back to a daily chart. And yeah, this continues to improve its position. Like the initial breakout in this stock was back in mid-December when those averages crossed and broke higher, pulled back to the averages, and then started to run again. So there were a couple of entry points potentially around this stock. It continues to be a hold. It's had that deeper pullback to the 100-day average. So that's good. It's good to see these larger consolidations. There's still plenty more upside potential in this. If I had this and I'd seen off this consolidation, which was probably I think a pullback which was entirely seeable, able to be seen off, like it's only come back to the 100-day moving average. This is why we use wide trailing stops. So it'd be interesting on a percentage basis, what was that? So it's a 34% pullback, but if you're using a wide trailing stop, keeping a stop below the 100-day moving average, could have seen that off and still be in this trade. That's why the wide trailing stops are so useful, because you do get these larger pullbacks in stocks which are on the move. It's still on the move to the upside. Do you buy it here? I'd probably like there's potential that does do some more consolidation before going on. I'd probably be watching the price action, not buying it at the moment. Like one possibility I often see is you could see it retest towards the averages, and then from there get a break up in a few months' time. I often see that sort of price action where it comes back to the averages, rallies, comes back for a second retest, and then goes from there. Not to say it will necessarily exactly go like that, but I feel this price action has a bit more in the setup yet. I don't know the three to go just yet. I'd be watching this one with either holding it if I had it, or watching it with the intent of potentially buying it on another break higher.
Okay. All right. PNC.
Yeah, this is an interesting one. Yeah, again, a little setup that didn't play out, broke high, then came straight back. But yeah, so a stock that's fallen from great heights. Like we were talking about the Selfwealth share price earlier, and this is sort of price action I'd want to see it's not dissimilar to the Selfwealth price action, how it's like declining below these declining moving averages. So what I want to see in the Selfwealth price action, what I was saying, was some sort of stability, get back above the averages, just build a bit of a base and then start to move higher. So we're not there yet in that stock, but this is often how these things play out when you're looking for an opportunity. So we've got this initial stability and basing and move higher or above the averages, traded sideways into the averages. So we've got this upward momentum pulling back to the average, upward momentum sideways into the averages, up again, was tracking sideways until just yesterday. We've got this, or is this today? Tuesday. So this is today. Today it's closed nicely yesterday, but then it's opened lower today. But in the scheme of it all, it's still just coming back to the averages. So if I had it, I'd be holding it. If I was interested in, I'd probably want to buy the break above these highs from the last couple of weeks. Probably buy maybe 51 at this point. See if it can just stabilize here as it has in these past retests. If I had it, my stop would be back down, probably below the May low, giving it a bit of room. So yeah, it's one with a bit of potential. I think it's an interesting one to see whether, like as I say, we don't know which trends are going to turn into the big trends. This has got the makings of one, but we don't know. That's why we have a portfolio of many relatively small trades. So we're playing many setups which are similar to one another, and then seeing which ones run and which ones don't. And that's how we build a strong stock bias. And then when they don't work, we cut them. When they do work, we let them run. And so that'd be the play with this one.
All right. AL3, would you buy it now or wait for it to go above the previous high, 11.5 cents, or buy it closer to the 50-day MA, or not buy it at all?
Yeah, they're harder ones, these ones, when it's a low price one as well. So you look at the risk, the percentage risk gets so high. So this is like almost 40%, say 35 to 40%, just to get below the moving averages. So it becomes it's a bulkier risk factor. Or you say, because you could say, look, I'll give it to 8.6 cents. I'm just pulling a number from the sky. I just give it to 8.5 cents. I'll give it 15%. But this could easily fall 15% in a day, and then 2 days later it's up at a new high. It's a volatile stock. So that's why you've got to give it some more room to move, or you've got that heightened risk of just getting chopped out on day-to-day volatility. Look at this point here where it rallied quickly, but then it swiftly came back and retested the averages. So it's entirely possible that we see something similar again, and it may not even run. Like we saw last time, we got excitement getting above the averages, and then it was back below, and then it was even lower still. This stock does have a habit of false starts. Like, look at this. We've got 1, 2, 3, at least 3 sort of spiky up moves, which quickly came down. So it's entirely possible that that's going to happen again. So I'm probably not a buyer now. Yeah, I'd watch it. And so look, if we saw something like that, where it holds onto its gains, and then the moving averages catch up and we start to break higher again, then that would look then different to how it's looked in the past, where it's quickly given back the gains. If it comes back, and this is where we talked about it. How do you tell when there's accumulation? There's accumulation when a stock rallies hard, pulls back, but then doesn't keep pulling back. It's there's buying underneath there. People are buying that dip. Nobody bought these dips. It was just a free fall. So if we got some stability where it travels sideways for a bit, moving averages start to turn up, then you go, okay, we've got the makings of an upward trend. We've got higher highs, higher lows, sideways into the moving averages, break to a new high. Let's go. And put a stop loss just back below the previous range. That's probably the way I prefer to play a stock like this. I think there's too much risk that it just comes. It's a serial offender, isn't it? It's done this before. Up, down, up, down, up, down. Why do we trust it this time? That would be what I'd say here. So that's why I'd probably not buy it now. It could spike up and double again, but it's probably against the odds. Doesn't mean it can't happen, but we want to play probabilities. We want to play risk and reward. It's too much of a roll of the dice.
I actually love that answer though, Jason. What you said then, I'd take a screenshot if I could now of that little potential price pattern that you did then, because a lot of the times people will see that spike and get this FOMO and go, I've got to buy this now. I've got to wait for a break and then buy it straight away, rather than being patient and just seeing some accumulation of the stock before it breaks to a new level, and having that patience. A couple of things come to mind. It's like, hey, there's plenty of stocks out there, all right, to be on your radar. So maybe just putting this on your watch list and seeing that time play out, as you said before, plenty of stocks, right? And not just being like, I've got to jump on this right now because it's gone parabolic all of a sudden over a day, and then it just come back down. It's just such a great sort of mentality to have, and being patient, right? And just seeing better price action to support this company if you wanted to get into it, right? So better price action play out. So I love the fact that you're saying, hey, wait for it to get to another level and hold there for a bit before you buy the next breakout, sort of thing, right? Hold there for a bit before next. If I'm correct, right? So yeah,
like maybe it is forming a big base here. I'm not. I can't say this isn't going to be a super stock of the next 12 months. Of course, I don't know. There is a possibility this is a big base. Like you can also say there's a head and shoulders pattern. There's a shoulder, there's a head, there's the right shoulder. Where's the neckline? No, something like something like through there. So on that basis, look, it's breaking up now. I think you've got to be able to try and look at a situation from different perspectives and just be flexible and go, well, accept that you don't know and see, like, could this play out? Like, it's interesting. Look, from that perspective, you might say, look, maybe I do want to buy it here and put a stop back below that declining line. It looks like a decent line. It's got, like, you could say it's got 3 touch points on it, and there is that pattern there. Head and shoulders patterns, I don't do so much those classic technical patterns now. It's more, I use the moving averages. I like those compression bands, but look, it depends on your risk profile. I'd prefer to wait for the price action, even if this is like your head and shoulders pattern. If it were to play out like a head and shoulders, then you'd probably get that return move to the breakout point, which is the price action which we just recently drew in, and then you get the rally off it. That would be how the head and shoulders plays out. So I'm coming to the same conclusion a different way, in that I'd probably like to wait for more price action and call it there.
Yeah. All right, let's have a look at WIF. Actually, no, start with, let's go in line here. Sorry, I missed TRG. Let's start with TRG. TRJ.
Don't know this one. This is often it's funny. Often when I don't know the code, I have a picture of what's going to come up, and it's often this is a picture which I'm expecting, because if it's been rising, it's probably triggered a motion trader signal, because that's how the system works. It's all about stocks which are breaking higher with positive moving averages. So I see the codes. I'm familiar with the code. When I see a code I'm not familiar with, either it's a low price stock or it's a stock which has been in a decline for some time. And that's the case here. So this has actually never been a motion trader stock. I can tell, because from when it listed, by the time the moving averages had enough data, it wouldn't have triggered. And then when we got enough data, it's been in a downtrend ever since. And it remains in a downtrend. Like, it's having a rally now, but like, how is this rally different to the rally we had in March and April, or the rally we had in May, June last year? It's or the rally we had in July 22. It's like nothing differentiates it from those previous rallies which didn't stick. So at this point, I think the benefit of the doubt goes to the downtrend still being intact, and this being a bear market rally. Now, that, of course, could change with additional price action. But at the moment, I wouldn't want to be buying it here. It's a case of, at the moment, it's in the phase of sell the rallies. So it rallies back to the averages, you sell it. In an uptrend, in an upward trend, when a market pulls back to the average, they buy the dip. And that often, when you're in a downtrend, it's a case of sell the rally. So it rallies back to the average, you sell. And so that's the way I'd be looking at this at the moment. I think the odds favour lower levels, but if we come back in 3 or 4 months and it's chopped sideways and now starting to push up, well, then we'll reassess it. You can always reassess and go, okay, price action's now changed. But for now, a stock like this, and not just this particular stock, but any stock with this sort of overall setup, they tend to be a weight on a portfolio. So I prefer to have them outside the portfolio. I want a strong stock bias with my portfolio. I want my stocks above their moving averages. Short dip below, okay, but as a general proposition, I want my stocks to be above rising moving averages. If I've got too many stocks which are below declining moving averages, well, then I've got a weak stock bias. And that's not the sort of portfolio we want. We're going to outperform potentially by having that strong stock bias. So we're cherry picking. So I want to take like the all ordinaries, and you look at this is how you can outperform. You take the all ordinaries, which has a bit of everything. It's got the best stocks, the worst stocks, and the in-between stocks. Now, if we can find a way to cherry pick, we take the stocks which are in upward trends above rising moving averages, we ignore the stocks which are in protracted downtrends, or the stocks which are going sideways. That's how we can build that strong stock bias and how we can potentially outperform. Doesn't mean you outperform every day or every week or even every year. There's going to be periods where you just can't beat the market because it's going sideways and you're getting a bit of whipsaw in your portfolio, getting chopped in and out. But when the market's trending, if you're in the good parts and you're trying to steer clear of most of the lead weight, that's how you can outperform.
All right, let's have a look at WAF. Thank you.
Yep, we're on the right side of the averages. So it's a case of let profits run. If you're in upward trends in place, there's nothing here suggesting it's at a peak. Now, it could, having said that, it could entirely come back and retest some moving averages, have a pullback, because it has had a strong run. So a multi-month consolidation is entirely possible. But the overall trends in place. So I'd be running this. I'd have my wide trailing stop and see where it goes. I'm probably not a buyer at this point, just with the consolidation that we're getting in some of the commodities at the moment. Maybe this could pause at current levels. We've got that uncertainty with the market generally. I'd very much like to keep it in a portfolio and let it run. I'm not sure just in the current climate I want to buy the high today. I'd probably rather watch how the price action develops. And having said that, it could just keep edging higher. And so be it. I'm not going to get on everything. I'm just trying to manage risk. Where do I want to get on? Where do I want to wait? Where do I want to watch? Where do I want to exit? It's just managing each situation, but yeah, a nice one I think to hold.
What about SVL? Would you buy now?
No. Back below these moving averages. It's like silver's is an interesting metal to have a look at. There's been a couple of plays we could have done in silver. Silver mines, it's not trading as well as the silver price itself. That said, we could say, just looking at this, you could say, look, there is support. Yeah, look, this. It's an interesting one, isn't it? It's trading just above support. Like if we go and we find, let me just find the silver price, which is it's got a reasonable correlation to the gold price as well. So you can see how silver mines isn't trading as nicely as silver. So silver's had this nice upward move. It's currently pulled back to the moving averages. Is the case now, is it going to stabilize here and rally again, or are we going to see it continue to give way? Don't know the answer to that at the moment, but at the moment this looks quite corrective. It's choppy, it's slow, lacks momentum, whereas the momentum was very much to the upside. So the path of least resistance does seem to be overall to the upside still. Looking at silver mines, it's just given, it had a rally and it's given back the gains plus some. So that's why I say it doesn't look like a standout silver play, but for someone who likes it, who likes silver and thinks this is a way to play silver, not that many silver plays on the ASX, pure silver plays. Just measuring out the risk. My ruler measure is not working. There we go. it's still a bit of risk, isn't it? It's 25%. So to punt, you want to punt the low above support. Well, it is a reasonable strategy to buy at the lower end of a range and have a stop below the range or below the support. So, but you're still looking at 25% from current levels. You're buying into the weakness. You're buying below the moving averages. I don't like those strategies. You're buying on support. Like if you're risking 10%, maybe 25%. I think is a bit rich for a punt. But look, it's a range bound stock. It'll be interesting which way it ultimately goes. It could well and truly go to the upside. This could be like the rally phase, and we've had the decline, and then the sideways basing phase. That this does make us way higher. So there is a play there. I think it's about 25% of risk. Are you comfortable with that? The upside from this, what's a 16-cent stock? Yeah, look, it could double. So it's asymmetric, but you're not buying with the trend. You're buying something which is chopping sideways within a range and without momentum. So I'd probably not play it, but I could understand why somebody would.
Okay, we'll finish off with this one. Here's IGO, if possible. I lost over 50%. Now, should I continue to hold or just consider this as a dud? Fundamentals seem to indicate a hold for it to turn around. Your views?
Yeah. Okay. I think this is why we always need to consider our exit strategy before we get into a stock. Okay, look, where am I going to be wrong? So I'm buying this because I think I like the story or like the chart setup or whatever it may be. But what if I'm wrong? Where am I wrong? Where am I going to draw the line in the sand to say, okay, enough's enough? I think you want to do that beforehand. If you're waiting to go, look, I just see what happens, then it gets a lot harder because it's like, well, look, I've come this far. I might as well give it a little bit more room. And then the same saga plays out when it goes a little bit further, but maybe we're close to a bottom now. I can see why someone would say that now. Look, I've written this all the way down. I don't want to sell now because the bottom is probably now within sight, and next thing it's going to be up at $10.50, $11 on its way back. And of course, that's the risk if you sell now. The risk if you sell now is that it is the bottom, and then that does happen. And this is why I think you don't want to be making these decisions now. It's better to have made the call when you're buying it or before you're buying it. Okay, this is where I call it quits. Downtrend is in place. This is a stock in a downtrend, declining moving averages. The risk is that it continues to decline and $5.50 turns to $3 and lower. That's the risk. That's not to say that will happen, but we've got to be aware. What if it doesn't stop here? What if it keeps trending lower? What if the path of least resistance remains to the downside? Could it get to $3? Could it halve again? Yes, it could. So if that's not an acceptable situation, well, then that might help make the decision whether to hold it or sell it now. I can't say to anyone, no, you should sell it now, because I don't know. I don't know what it's going to do in the future. I just know what the current position is, and I can comfortably say I wouldn't buy this stock, and I wouldn't have it in my portfolio because I would have, if I'd bought the earlier strength, I would have cut it much earlier as it was breaking down. And I can say that easily because that's my system. That's my systemized approach. It's like it's every trade's like a cookie cutter of the last. If this happens, do that. If that happens, do this. So I know what I do. It's not like calling it after the game, going, I would have done that. It's like I've got a repeatable process. So that's why it's easy for me to say like what I would have done. And I think this is why a lot of portfolios struggle, is because people get stuck in stocks like this, and if you get in one like this, then it puts the pressure on to get into another one which is going to double. you got to get 100%er to make up for a couple of stocks which halve or go down 70 or 80% on you. Better off keeping those losses relatively small early and focusing on keeping your winners, not keeping your losers. It's a tough one. I feel for people in this situation, because it'd be lovely to say, look, you just hold here, it's going to come good. And that's often the advice I hear people give. Oh, look, just hold it, it'll come good. I've heard that many times before. But you got to say, what if it doesn't come good? That's the question. What if it doesn't come good? What if it halves and then halves again? And this is the dilemma, the predicament a lot of people find themselves in.
Yeah, you got to be willing to wear that risk, obviously. So, all right, thanks for that analysis, Jason. Sorry if we missed a few tickers there. Just conscious of time once again. I might just finish up with answering a couple of questions here around the Selfwealth platform, if that's okay. With the stop losses. Stop loss just act as a trigger. So anyone that has a stop loss, it will trigger and then put your order in the market just as if you're putting your order in the market without a stop loss. So the answer around the will it stay in the market if you've got a future expiry date? Yes, it will. So if it hasn't filled entirely on the day, it should technically stay in the market until it gets filled. So I hope that answers.
What if there's a corporate action, like
I was going to mention an exception to the rule. If it goes ex-dividend, then that's just the general thing. Let's say the corporate action goes ex-dividend, it will get purged. That the ASX will purge all orders, all pending orders in the market, if that happens. All right. So yes. So that's the exception to that. But if you've got a future expiry date, it's triggered the stop loss, future expiry date, you don't get filled entirely on that same day, it will stay in the market until it gets filled, unless there's a corporate action, obviously. The art, yes, we could turn both our art pieces around and they'd probably look exactly the same, Baz. I agree with that. It's one size fits all there. You can do whatever you want with that. And then finally, around security, look, two main questions that I have, or we have, is always, you've got to remember that ComSec, big banks and all that, yeah, they're too big to fail, they say, right? But at the same time, the stocks are held exactly the same as how we hold them here at Selfwealth. They're always under your own holder identification number, which means if something ever happens to a broker, those stocks are still held under your name, right? And they're just transferable to whichever broker to do whatever you'd like with it. Secondly, with cash that you held on the platform, it's actually held within ANZ, the ANZ Bank, so Big Four. Obviously, it's all segregated from any operational funds to do with Selfwealth. It's only used for the settlement of your trades. So once again, too big to fail, these banks. So we use them, and we use a lot of great third-party reputational partners. And so far, after 10 years, we're doing a lot of great work in terms of performance, security, and speed in the company. So, look, if you have any questions and your friends are in doubt, then always just send questions through, and we can help, help to make their doubt better, at least, or help them out there. All right. As for Jason, he's a 30-year veteran, so go visit him at motiontrader.com.au. He's been in the game longer than Selfwealth, so go check out his website. He's been a great mentor to me over the last year and a bit now. Feel free to go check him out anytime. Please like and subscribe our videos. That would be great. Like and subscribe and do any comments you would like as well. We appreciate everyone attending once again this week. Now, for next week, we are having an end of financial year break, so I'm sorry for that. We won't be here next week. Enjoy a bit of time off. Enjoy not having us there in front of you on Tuesday, and we'll be excited to come back the week after. Jason, is that right?
Yep, back the week after, and I'm responsible for the break because I'm off on the family school holiday vacation, and too cold in Sydney. Got to go north, so got to go north and warm up a little bit. But as Rog says, we're back in 2 weeks. Yeah,
too cold in Sydney. If it's too cold in Sydney, then we're really struggling down here in Melbourne. So you enjoy the further north up there, and thanks to everyone once again. And we'll see you in a couple of weeks' time. All right, thanks, guys. Bye bye.